Now, the Colombo Stock Exchange will not be trading this week after the Securities and Exchange Commission announced that the market would be taking a 5-day breather. However, this news has not gone down well with some sections of the business community, namely the Ceylon Chamber of Commerce, who say that this paints a bad image of the bourse in the minds of the international investors. To talk us through the decision tonight is the chairman of the Colombo Stock Exchange, Dumith Fernando. A warm welcome to you. Thank you for being here. Now, what's this thing all about? Closing the stock market for 5 days. Did you back this decision? I remember you fighting for stock market to be open during a time of pandemic, saying, no, we should allow investors to participate. But aren't you preventing investors from participating in this? We see the opposition parties saying closing the stock market down during bad times and reopening it during good times doesn't really send good signals to investors. You have an international trading background. Is this right, or were you pressured to do this?
Yes. No, I will say, to answer your question, yes, I did back this decision, and I will explain why. The situation that prevailed during the pandemic, when the market was closed for 7 weeks, I think is quite a different situation than where we are today. It was a difficult decision. There is no clear right or wrong answer. I think we had to, this is not a black or white decision. I think that this took a lot of thinking. We have been debating this for weeks. We have been speaking to many different stakeholders. But I will point out that something has definitely also been introduced that is new, that did not even exist 2 years ago, which is the introduction of the new SEC Act last year. Under the new SEC Act, there is a very clear definition of responsibilities of a stock exchange. And that includes, I will quote, to ensure an orderly and fair market in securities that are traded through its facilities. And secondly, most importantly, for us to act in the public interest, having particular regard to the need of protection of investors. It goes on to say that interest in protecting investors takes precedence over other responsibilities what we may have as directors of the stock exchange.
But how are you protecting investors here?
So we're doing that by, we need to look at whether we have a free and fair and efficient market in place. Now, what does fair market mean? It means a market that reflects supply and demand properly. And if you think about what's happened today, there are some elements of unfairness or disorderliness that people would argue. One factor is, of course, that there has been a lot of margin and forced selling pressure in the market. It clearly has created an imbalance in the fair supply and demand of trading. Now, there is forced selling pressure at any given time.
But isn't that how markets operate? I mean, there's sentiment, you react to sentiment, and that's how it happens world over. But how do we take this decision?
So anyway, I think what we have now is an extreme situation. So our rules will generally protect the exchange without any intervention for 99% of the time. I think we are in one of those 1% tail events, because we are clearly following the announcement of the preemptive default of the sovereign. We are clearly in an extreme situation where under the SEC Act as well, it defines economic and financial crisis. I don't think there is anyone who will argue that we are not in that situation now. So what works for 99% of the situation sometimes doesn't work for 1% of the situation.
Does this mean you are afraid that investors will exit the market, and you were trying to prevent this and protect the stock market, or are you waiting for good news from
No, we're certainly not waiting for just good news, because it is not our job as a stock market to define where the pricing moves. What we are responsible for is to create an orderly market. So at the moment, after the news that came out last Tuesday, we went into a holiday periods after that. Even sophisticated investors have told us that they have not been able to digest the news and actually understand the implications of that news on their investments. That is the definition of what creates panic. When you have panic, you don't have orderly markets.
Since you have international experience,
Yes.
Dumith, I'd like to ask you, world over we see events like the Ukrainian war, Brexit happening, and there have been emergency situations too.
Yes.
With the Afghanistan crisis, but we didn't see markets shutting down.
Actually, we have seen markets shutting down. I mean, you go back to the largest and the freest of markets in the New York Stock Exchange. After 9/11, when there was again panic, a lack of information, both related to security and economic impacts, the market shut down for an entire week. On the Ukraine situation, due to the impact of various sanctions on Russia, the Russian markets were closed for weeks. In similar crises like ours, when you've had default type situations, we've had examples like Zimbabwe. During the Arab Spring, during all the protests, the markets in Egypt closed down for weeks. So there is precedent here.
So what's the worst that could have happened if you kept market open for the next 5 days?
I think we could have risked a very disorderly market, which would have been driven by panic, which would have been driven by much more artificial impact on supply and demand before people were able to actually measure and evaluate the impact of the news that came out last week. We also need to remember that we're not talking about protecting just very large investors. You know, in the last 2 years, through a lot of the hard work we've done, we moved the exchange from having about 15,000 active participants to over 60,000 last year. And a lot of them are smaller investors, middle-income investors, and it is our duty to make sure that such people are also protected. And despite, I think, the objections, particularly from the chamber, which represented, obviously, the corporates, the duties of the directors of the stock exchange are very clearly defined in the SEC Act as having to place priority on protecting investors. So now, it's not an easy answer. There are multiple aspects. Now, I will say that one of the foundational principles of an exchange is that we should keep markets open. So we are trading off that principle in the short term until we allow a breathing space to do two things. One is to mitigate, not prevent and eliminate, but to mitigate the effect of forced selling, because we are working on some changes to relaxing some of the credit rules. So that we hope will bring some relief. It won't eliminate forced selling entirely, but it'll help. We also expect that this time will allow people to digest and understand better information. I'm not saying just good information or positive news, but just better information. And if we do those things, we do feel that this short break, this 5-day period, will actually serve its purpose. So does this mean,
are you of the opinion that the market circuit breakers alone wouldn't be able to mitigate losses of a Colombo Stock Exchange?
I think what we have seen is realistically, in extreme situations, circuit breakers will allow the market to operate for a few minutes a day. We don't want to get into that situation because that creates other kinds of issues. But we have got feedback from even some foreign investors who recognize that in a situation as extreme as this, that it is sensible for us to put what I would call a slightly extended circuit breaker.
Very quickly, you mentioned international investors here. From an economic crisis, we're seeing this transforming into a political crisis, a deeper crisis in the country. But how do you foresee markets, the forecast markets for Sri Lanka in the year ahead, especially international investor participation?
Yeah. Look, I mean, we have seen since the currency was floated in early March that in March we had the first month of positive net foreign inflows since 2019. So I think any action that goes towards creating and releasing some of the pressures in the macroeconomic imbalances will be seen as positive. We have got feedback that once some of the clarity returns, that some people do believe that the valuations are at a point where there would be attractive entry points. However, we all know there are some fundamental and structural imbalances that need to be fixed. I think there is much more optimism that those are being acknowledged and approached in the right way now. And we hope that we hear some progress on IMF talks and so on. But if we do see some of that happening, we do see that even foreign investors will look at buying opportunities going forward this year.
Right. Thank you very much for your time here on Other Than
Okay, thank you.
English.